Hey guys, welcome back to the Patty Martin Real Estate Group YouTube channel. This is the October 2023 market update. And this is an interesting month, Patty. I'm not convinced a whole lot has changed since last month.
Quieter.
It is quieter. But when we're just looking at the numbers, they're almost mirrored. So let's get into it. There's a lot to talk about, and I also want to get into like our bold predictions, what's going to happen in the next 4 or 5 months. So let's see who's right at the end of it. The real estate board has come out and said that an increase in newly listed properties is providing more choice to home buyers across Metro Vancouver, but sales remain below long-term averages. Is that what we're seeing here, Patty? Is that expected? What's your comment?
So certainly we are seeing some inventory or more choices. But there's still really big pockets where there's nothing. Like there's nothing available. And
What do you
so
think that is?
I think people still don't want to sell. Like I think they don't know where they're going. They're worried about the interest rate being too high even to add to their mortgage if they're trying to move up. I don't know. I think that everyone's worried about everything.
Yeah, buyer sentiment is a big factor that plays into market shifts. Um, let's get into the numbers and then we can kind of comment on that further, because I think once we review what's happening in the market as a whole, it'll make a little bit more sense as to why there's hesitation on either side, the buyers or the sellers. In terms of sales in the region, there were 1,996 sales in October 2023. It's a 3.7% increase from October 2022. Um, it's practically a 4% increase from September. So we've actually had more sales in the month of October than we did September. But this is the big number here. It is 30% below the 10-year seasonal average.
Mm-hmm. Yeah.
Are we sensing that? Are we feeling that?
Oh, Adam, we ourselves had a really busy month, so it's difficult to say that the market has slowed. Like we had a really busy month, but if you look at the trajectory of listings coming on, it's definitely moving in an upward direction. It's very slow. And you look at the number of sales, it's moving in a slightly downward direction
Yeah.
again. And eventually, the gap gets wider, right? So then there's more choice, and then there's more reasons for people to hold off doing anything.
Yes, then the process takes a little bit longer. Then buyers have an option for maybe a second showing, possibly a third, and if it calls for it. There's just that you have more opportunity as a buyer to review the market and select a choice or select the house that's right for you.
Mm-hmm. Mm-hmm. And certainly we're telling our buyers, like a buyer suddenly is maybe the only one looking at a property all of a sudden. And so isn't that a better time to buy than when you're knee deep with 7 other groups trying to duke it out to see who's going to get it?
Yeah,
It's
of
a
course it is.
much
So
better
this
opportunity.
is now where I think we're seeing the full effect of 7 and 8% stress test interest rates.
Yeah. Yeah.
So like buyers, they want to buy. You're in Metro Vancouver, very desirable place to live. There are buyers that are showing up to open houses. I've shown houses that have had 40 groups through on a weekend, 0 offers Monday, Tuesday.
Right.
Buyers are there, but then there's that hesitation of, you know what? There's conflicts. There's economic uncertainty. Just are we in a recession? Like shallow landing, like whatever they want to call it. So there's just that
Shallow
hesitation.
landing. Yeah.
Soft
Yeah,
landing.
for
There you
sure.
go.
Yes. That sounds better. Yes. Soft landing's better. Um, yeah, I think there isn't a reason to hurry, so they don't. And so if we look at days on market, it's gone from, 6 or 7 to more like 20, 25 before you
Yeah.
have a
Well,
meaningful buyer. which
Yes.
is still hard to feel sorry for someone that it takes all of 20 days to sell your house, right? It's still pretty fast. A normal market used to be 60 days, 90 days before you get an offer.
I was going to comment, we've been spoiled in the past probably 3 or 4 years that homes were listed for 7 and 10 days and sold in multiple offers. Like as a seller, you've been spoiled. You haven't actually been in a real market for quite some time.
Yeah, I would argue that everyone's been spoiled, not just the sellers. So it's because it's really much easier to group people together, to bring them to someone's house. It's a shorter period of time. People are not cleaning and preparing for weeks on end. They're doing it 1 week and it's over.
Hmm.
Realtors are able to bunch people together, so the showings are all following each other. It's been a real bonus for the sellers. It's been hell for the buyers
Hmm.
because when there's 7 offers, only one person gets it, and then there are 6 other people that are very disappointed.
And
So
still looking for a
we're
home.
swinging to a market now where the buyer has more choice. That means they have more time. That means they have more power, even in the negotiation.
So let's talk about that choice here. So when we're looking at new homes listed on the MLS this month, there was 4,664 new homes, all property types listed in Metro Vancouver. It is 15.4% increase from October 2022, but it's still a 4.8% um, above the 10-year seasonal average.
Mm-hmm.
Now, when we actually are looking at new inventory, I found this was pretty interesting. Not that it really means anything in one way the market is going, but compared to last month, September, we are actually down 14% for new listings.
For new listings, yeah.
So that could show there's still hesitancy on sellers to get their house on the market.
Mm-hmm. Yeah, and you're coming up
When we're
to a
looking at the
time when
total amount of inventory listed on the MLS, there's 11,599 homes. It's a 12.6% increase from October 2022, and 0.6% above the 10-year seasonal average. So
mm-hmm.
not much change there.
Not much change.
What I found very interesting, and I mentioned this in our last podcast, is that in Metro Vancouver, the total amount of inventory in the past 3 years was over 12,000, essentially for one stretch of time. And that was June 2020 to November 2020. So that summer going into fall, we had consistently above 12,000 listings. And then after June 2020, it's always been below 12,000 and sometimes
Mm-hmm.
considerably below 12,000. But we're not even at
Mm-hmm.
that 12,000 point. So we're
No.
still technically super tight for inventory.
But what will happen is it just not, it might not happen really fast. It could,
Right.
but it might not. And how it happens slowly is that the buyer's motivation to buy wanes,
Yeah.
and then there are, I mean, some homes have to sell. Like some people don't have to sell. Some homes have to sell. They're empty. The people have moved. Someone passed away. Someone got a divorce. It has to happen. So it's just a matter of time. And then as that inventory builds up and doesn't sell, I mean, that's how we start to see prices soften, right?
Yeah. Because the people that sell, they're going to start to set the price for that property type in that neighborhood. And right.
Yeah, just like in a rising market, in a market where there's not much activity, things change, right? And that's what happens, and that may be where we're headed. It may be. It certainly looks a little lighter than it has been. We have put several new listings on the market in the last few days, and we're not getting the kind of activity that we experienced
Expected.
3 to 6
The board,
months
that's
ago.
that's very conducive to what the board has just come out and said. They said with more supply in the form of resale inventory and weaker demand in the form of slower sales, we've seen the market conditions overall adjust towards a more balanced market.
Mm-hmm.
They said high borrowing costs, we've seen over a decade, to continue constrained affordability. A silver lining for buyers is that price increases have abated with these more balanced conditions.
Mm-hmm. Yeah. But it's what remains to be seen is whether or not it will affect prices substantially. If the inventory stays slow,
I
it's
don't
not
think the
going to
market
happen.
numbers, yeah, I don't think the market numbers are going to influence home prices going up or down. I think there's going to be other way bigger factors, and I'm going to ask those questions right after we get to our last point that I think are really going to dictate how our market plays in the next 5 months or even 1 to 2 years. When we are looking at sales to active listing ratio, the big drop really happened from August to September. When we went in detached homes from August to September, it was 14 in August to 12 in September. So sales to active listing ratios. For townhouses and apartments, this is where the big drop was. We had a 28% drop in sales to active listing ratios for townhouses from August to September. So it took a lot longer for those homes to sell.
Mm-hmm.
And for apartments, you went from a 31% to 21%, so a drop of 33% for sales to active listing ratios.
Mm-hmm.
Okay, and as we get into October here, the numbers are practically the exact same for September. So they really haven't changed month over month.
No, they
We're
were
still
pretty
looking at about
close.
a 17% market sales to active listing ratio. And if we break that out, detached is a 13%, townhouses are 21%, apartments are also 21%.
Yeah,
So yeah, the market is really starting to go back to a
starting to,
balance,
yeah, to very
right?
balanced, yeah, yeah, and that's where it'll stay unless there's a huge influx of inventory, and I don't see that happening, but
I'm finding the market very similar to what it was October to December 2022.
yeah,
I'm finding it a lot slower. Like we have some really, really attractive listings that just aren't getting that type of activity. But when I'm looking at days on market, when we were looking at August to October, the average days on market was about 12 to 14 days because agents would they'd hold their offer date. So that kind of inflated it a little bit.
mm-hmm,
When we looked at days on market in 2022, October was 14, so 2 weeks. November 17, okay, 2 weeks. December 25 days on market before a sale. January 30 days on market. And we
mm-hmm,
get to February 2023 now. It's 14 days on market.
mm-hmm. Dropped right
So
down.
we're mirroring that right now.
Yeah, and some of it's holidays and
Some of it's holidays, some of it's
yeah,
that time of year.
yeah, 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 for sure.
But this is the interesting thing that I've been reading. So you read all your financial documents, you read newspapers, you read Business News Network, and what they're talking about is how there's somewhere between 400 and 500 billion dollars of mortgages coming up for renewal around 2025, 2026. So that's approximately 60% of mortgages renew in the next 3 years.
So it's just the only thing is, Adam, like there's a lot of talk about, oh my gosh, the sky is falling, but a third of the people in our country own their home outright, and another third own at least half of their home. So it's hard to believe that there's going to be this mass, you know,
Dump of inventory,
disaster
panic
of
selling.
people
No,
can't pay their
yeah,
mortgage. I think people are going to make different choices. I think people already have got to. I mean, we talked about this last month. The economists told us that in the at the Remax convention, people have spent all their savings from COVID. They've done it. It's gone. And we know that. We can see how people were spending. We probably were part of it. But um but it just means a tightening, and the sky's not going to fall. Like we've been in situations before where it gets tough, and certainly some people overextend themselves and have to sell. We see that occasionally, but it's not a common theme. People just get a little more uh, cautious and a little more ready to trim their budgets in order to be able to comfortably afford their home. And so if we look at that and think, okay, well, okay, that's the end of 2025, by the end of 2025, interest rates should actually be lower again anyway. They're not probably going to be 19%.
No,
Nobody's
they're
going to
not.
see that again. And if they did,
So
everybody
what's
would be running out
a
to
few
borrow. But
what a few news outlets have come out and said when they're interviewing other economists is that before interest rates drop, the Bank of Canada wants to see unemployment more and closer to that 6% unemployment factor. Right now, we're currently at 5.5, so we're not far off, right?
mm-hmm,
And then they're
mm-hmm,
talking about inflation needs to be around that 2.5, 3%.
mm-hmm.
But the factor is that interest is also included in the CPI shelter data. So it's included into that inflation print.
Right.
Once you remove the the banks the
That's what the
interest
economist
already,
said.
we're already there.
We're there. Yeah. It's exactly what the CIBC economist said, that if you take out the increase in the interest rate of people's mortgages as a factor of inflation, you no longer have inflation. It's gone. It's at 2%, which is normal.
So now are we in a scenario where we're the chicken and the egg? Do you drop interest rates first and slowly over time, hoping you don't spark more inflation? Or do you wait until things get worse and then drop it to kind of stimulate? I'm not an
Well,
economist. I don't know.
the choice they're making is to do it slowly.
Yeah.
Yeah. I mean, the choice they're making is to do it slowly. And, if it's right, well, or wrong, it doesn't matter. That's what they're doing. And they're the government, so they get to do
You
it.
can't change it.
No, no matter what, you're stuck with it. So, but the most important part is I think we want to be careful about saying, oh my gosh, everyone's going to be in so much trouble. I think they're going to have to make some different choices. But most people are pretty responsible, and they know that once they make those choices, they can afford and there are going to be people that choose a simpler life, just like there will be people who would like to buy more. If you have a 2% mortgage that you're hanging on to for the next couple of years and you want to move up in the market, great time to do it. Blend your rate. You can find a house right now that no one's competing on. You're moving
Yeah.
up in the market. That's a really good time to be doing it. So there's opportunity still.
I think that's a good place to stop. Do we have any market predictions over the next, let's say, half a year? What can we advise our buyers or sellers
Oh.
for in the next 6 months?
I would not think that we're going to see, I don't think we're going to see a tremendous amount of activity, not like we were experiencing last spring. I don't think so. I think there's a few too many people that are in exactly that position where they're probably budgeting a little more carefully,
Mhm.
and they simply can't do it. So, but come the fall, it's hard to say because that's when they predict that the rates will start to drop again. And it's tied
Okay.
into an American election to get votes. Right?
We'll
So,
see what happens.
yeah,
Bold
exactly.
predictions from Patty Martin. Let's write them
Yeah,
down and
well,
we'll review in 6 months.
the mortgage brokers always tell you that American election brings the interest rates down.
Well, it'll be a welcomed endeavor.
Yeah.
Perfect. If anybody wants to reach out or get some advice on how to navigate this market, if you're buying or selling, reach out. We have a step-by-step guide to help you navigate difficult markets. We'd love to share ideas with you. Our information is in the description below. Reach out, call, text, email, leave a comment in the chat. We'll get back to you on anything you need.